So gold is trading around $5,200 per ounce as of today, March 10th, 2026. And this is very impressive. It is about 78% more than what it is last year around this time. And not just that, it is near an all-time high after a huge 2025 rally. I'm going to explain to you exactly why gold is able to do this. Why gold is able to keep climbing higher and higher despite our current economy. And I'm going to explain it in simple ways. So the first main reason why gold has been able to achieve all it has achieved in recent times is because of geopolitical worries. Now, let me explain. The war that has been recently going on between Israel and Iran, the tension between them, and the strikes that has been going on lately, with Russia and Ukraine still having war, and US President Trump applying new tariffs onto China, Canada, Europe, and South Korea, at the same time having US military move into Venezuela and also threatening to take down Ireland. All of these plus together are old conflict that has not been fully resolved, plus the US has been more and more aggressive with these new policies on trade and geopolitical affairs. So what does all of these add up to? All of these things would add up to investors, being more scared of bigger wars, oil shortage, or broken supply chains that could hurt the entire economy, right? The result, they buy gold. Why? Because gold is a place that no single country can control and has held value for over 5,000 years. This is a safe haven to push the price higher. Now, in simple terms, gold is the only thing that geopolitical worries cannot touch. So it's a safe place to put your money in a time where all currencies can be easily shaken by geopolitical worries. So the second reason why is because central banks are buying a lot of gold in recent times. So in 2025, they have bought about 863 tons of gold, which is an monthly average of 27 tons. That's a lot. So the big buyers include of China, India, Poland, and even now Malaysia and Korea are starting to buy gold again. So this is happening because these countries, all of these countries, are trying to rely less on the US dollars after seeing the Russian money gets frozen by sanctions. Of course, there's more than one reason why they want to rely lesser on US dollars, but if you want me to make a video about that, you can comment down below as well. And I can also make another video talking about why a weaker US dollar is actually beneficial to the US right now. And if you want to know about that, you can also comment that down below. And let me know if you want to hear about that. Now, moving back is that they are diversifying and protecting against inflation or currency troubles. Simply says because they don't want to be scared of inflation, because they think that inflation is going to make their money lose value, which is true. And also they want to make sure that the US dollars is not the one they hold on to, because by the end of the day, there's always been strongest countries that went up and down, but the one thing that can always maintain a value of money or value of currency for the longest time is gold. Because strongest countries come and go, but gold has always been there. Now, the effects is steady, strong, and demand from huge institutions that keep pushing gold prices up even on the quiet days when there's nothing happening. So, the third reason is because of recession fears. This is happening because in February 2026, the US actually lost 92,000 jobs, which is actually a lot more than they expected, and they only gained 50,000 jobs, which is a lot lesser than they have expected as well. And unemployment rate is a huge indicator for recession a lot of times before it happens. And unemployment rate right now is around 4.4%. And if you know anything about unemployment rate, you will know that anything over 4% is really bad already. And this is happening because of the strikes coming from the war, the cold weather, as well as the earlier high interest rates that is causing people to spend lesser. So people are now worried about a slower growth and less spending. The result, more buying gold as a protection against the weak economy. If you know, the higher interest rates would make people want to save more money, put more money in bonds because the interest rates is really attractive, right? So some people would choose gold, some people would choose the bonds, but in this case, the gold was put under really good circumstance that actually the growth is really incredible. So a lot of people will also contemplate or even diversify into putting in both, which is why they do so. But at the same time, to understand why they would put it in bonds is because if the interest rate is very high, of course you want to earn the money, right? It's basically free money. All you gotta do is put money inside. So many people put money in bonds so that the interest would rise and they can get money, which in turn means that the money is not circulating inside the market. And at the same time, since gold is a very good way to preserve your money during these kind of worrisome times, they are also actually having a great return based even comparing to the bonds and the interest rates, which is why people will also put it in gold as well. And the fourth reason is actually something to follow up on the third reason, which is that the Fed is actually now expected to cut interest rates this year as well. What does that mean is that since gold is already looking pretty attractive when bonds is actually having a high interest rate, how do you think gold would look when they do cut interest rate? It means that gold, it will be the undisputed best choice to put where to put your money, right? Which means that gold is going to go even higher. And because it is expected to cut interest rate, because the job report seems pretty bad and also inflation seems to be pretty manageable, which is the reason why they would consider cutting interest rate. But it's still something to look out for in the future. And a lot of gold investors are actually recently putting a lot of money into the gold ETFs. Well, that's some extra information. So moving on, I'm going to answer a question that I think most people will also ask themselves, because I sure did. And the question is, why didn't Bitcoin perform the same as gold? Well, the reason why Bitcoin didn't perform the same as gold, despite the fact that they have a really fast growth even back in 2020, is pretty simple. Well, you could say, why didn't Bitcoin react the same? Even though Bitcoin and gold, technically speaking, I guess, is a currency that does not belong to any country to control. So why didn't it react the same? Well, the reason is because Bitcoin is at around $70,600 right now. It's worth. And it actually dropped 5% right after the weak job report, while the gold risen about 1%. In recent stress like the January 2026 tariffs, gold jumped about 8.6%, but Bitcoin fell 6.6%. And the reason is simple. Bitcoin acts more like a risky tech stock, meaning that people don't really trust it like they trust gold. It moves with the stock market and Nasdaq. So when fear hits, people sell it fast because it is more volatile. Big swings like 40% swings up and down are normal, and investors are so scared that especially traders, they're most afraid of volatile assets such as Bitcoins. And also, Bitcoin is still new. Gold is the exact opposite because it is super stable, physical, and trusted for thousands of years. That foundation is hard to build, and it's something that Bitcoin does not have yet. Big institutions like central banks buy gold for real safety, but Bitcoin is they do not feel the same way for Bitcoin yet because it lacks the long history and can force regulation risk, and it feels more like a growth gamble than a pure protection. There's a difference. Growth gamble as in like you wanna earn the money. That's why you invest in that thing. But pure protection is like you gotta make sure that your money stays valuable for a long time. That's why you buy that thing instead of buying that thing so that you can exponentially grow get exponential growth, like tech stocks. You know, that's the difference between buying Bitcoin and gold. Bitcoin, you expect a lot of return, high returns, but also high risk. But gold, you expect low risk, lower risk. I wouldn't say zero risk, but low risk. But at the same time, consistent growth to maintain the value of your money. That is why money flows to gold instead when things get really scary. Well, bottom line, gold is winning right now because the world feels risky, and gold has proven that it can handle risky situations better than any asset in the world. So that's it for this video. I hope you enjoyed it. Like and subscribe if you did. I'll see you in the next one.